So the SPX code is mainly, this is the actual price that caps. The SPX 500 is more of the futures price. That's where it gets, it's more smoother. So let's look at the monthly, since it's the end of the month. So you can see you have a lower high basically from here. And the high of today, or the high of this month, was 2190.1, 2193.9. So you have a lower high. It would have been a much better movement if it became basically, if this was bearish, that creates a pattern called evening star, but it didn't want to, right? So their forecasting, according to news, is that October might be a bullish month for the very first time for a long time. That's their projection. But never believe on what they say basically on news or what you read, okay? Because they might be hooking people up. So, in my opinion, not a good idea. Yes, it was very bullish basically of July, currently in what we call blue sky territory where everything's too high. So when everything's too high, you need to be aware and be aware about it. Okay? So if we look in terms of the weekly time frame, though, it gives you a different picture. Beautiful. Things like this is where now you start to get excited. Right? So you have 3 weeks, you have a lower high. That's why as of probably the end of today, I will short this one. Okay, so that's me. That's my plan. Okay, this is a really good opportunity. In terms of the S&P, if I go through the Dow is also the same.
So you're going to short the market?
Oh yes.
Like S&P?
S&P, the YM. So I like the YMs better because it's faster. So
the what?
YMs is the Dow. The Y. Oh, sorry. It's a code for a futures price for the DOW30. Okay, for the US 30. So that's basically it. If you're into options, maybe you can think about that. You have 55 minutes. Okay, so there's an opportunity. So going back to the S&P, looking at a daily time frame, the question is which one's which? Is today a fake out based from yesterday's drop? Volume is down massively. Okay, so you're on a level of supply, you have a low risk, high probability trade, you have a lot of momentum through here. So the odds and probability that it will continue to drop is more than likely to happen. Okay.
I've never quite grasped the volume issue. So when we're looking at a really forceful candle like today,
yes,
but volume is down, that means a few people are placing big orders.
It's mainly the number of transactions. So volume is just mainly the number of transactions has been placed between a buyer and a seller. That's what volume simply indicates. When there's a decrease in volume, it means that either there's less demand and more supply in terms of buying and selling, but the price basically went up. The question is who is actually really buying? The retailers. That's being dictated from whatever news are happening today, and they're pushing it. But the question is, how much are they really buying? Not as much. Let's say yesterday, there's a lot of fear. That's why people sold so much. So why between the selling and buying doesn't make any sense. This is why this is what we call, we're looking for divergence here as well. When there's some form of divergence, the odds and probability that the price will drop is more than likely to happen.
And the divergence is between the force and the volume?
Correct. Yes. Also comparing it to the previous. So today might just be a fake out that they're luring retailers.
Maybe institutional traders are kind of
oh yeah, but they're already selling. Being a Friday too, the end of the month, right? So, and then it's the end of the quarter. New quarter will start of October till December, basically. In most cases, like I said, October is always a bearish month. For the past 2 years that we've been to the to the trading floor, for some reason we always hit the day where boom, just basically tanks. October 16 last year, October 14 the year before, and the market just basically was dropping. We were there when there's a lot of activity. So
is there specific dynamics why the optical move is there?
because of the history from the Black Monday, right? October 1987. And then if you look at 2008, same thing, October.
Wasn't the original crash in October too?
Yes.
The depression crash?
Correct.
Yeah. And also the earnings will be middle to end of October. All the earnings. So
Exactly.
the market will be there.
It's all earnings season. This is why it's better to short than to buy. You have a higher probability. Exactly. So it's, the sign is already basically, the sign's already there. The weekly time frame especially, your weekly time frame, there's a methodology we use in advance. I call it basically a segurado technique, meaning it's certain that this is basically going to drop. With you have your STS or sequential transition, you have a lower high, you have a lower low, that is a downtrend. You only have two options, either a new lower low or a new higher low. That's it. So when that occurs,
so the red candle is forming a lower high, and the first green candle is forming a lower low.
no. If this one closes right there, you have a lower high.
Yeah.
This one already confirms a lower low from the last low.
Right.
From that low,
Okay.
right? So you currently, at this point, is a clear cut that since August, you are now in a downtrend. This downtrend will translate as a correction of this movement since February.
So if I have any open trades, better to close it now.
If I was me, absolutely.
Okay.
I am not a buy. There's no way. So
you can
it
buy
can't
dollars
sustain.
then, right? If the market, you are forecasting the market and you're tanking, then you can go US dollar long.
No, you can't go along the US dollar. The US dollar index, yes.
Yeah.
That's why I'm
So
bullish with the dollar
you
index.
know, whatever pairs you choose, you can go US
Correct.
dollar long.
Yes.
If it is, use the other
Correct.
criteria.
That's why in terms of longer term, excellent. And now see, you guys are now seeing the whole connection of what's happening. That's why it's easy to trade in terms of the futures market, the stock market, is because you see the whole global connectivity of the whole economy, right? So if that's why I'm bearish with that, then I'm bullish with the dollar index. And if I'm bullish the dollar index, I'm bearish the major currencies, and hence still leaving the positions where I have at this point in time. It's just a matter of time. It's just being patient. And then through there is that every time it hits a supply, you keep selling. So you're scaling once again. That's why from now till the end of the year, you have a lot of good opportunity. Either you make a lot of money or you lose a lot of money. Very simple. Right? So that's what you're seeing. It becomes so clear. That's why trading becomes so easy. Right? But this type of piece of information, of course, needs to, one, you need the piece of information. Two, you need the connection in terms of the puzzle, putting it all together. So in terms of the weekly, I am not bullish, I am bearish. Longer term, to medium to longer term, they need to correct itself all the way back to 2100, but on the bigger scale is this. From February all the way to there. So approximately, around the 2100 mark. Oops. To correct around the 2100 mark and the 2050 back down to 2000. Now, of course, we are smarter than the ordinary guy. You guys already know how to draw your trend lines and so forth. Right. First, they need to cover this distance to the downside, back to 2125. That's the first level, and it could happen in 1 week, next week. I mean, there's also a lot of reporting next week, right? Especially, I think, Thursday.
So far, all the news from US government has been fantastic.
Is it real? It could be
At
on just
least-
the outer perspective, right?
at
And
least
no,
on
you're absolutely
paper.
right.
At least on paper.
Yes, on paper for
Yeah.
the norm.
Yeah.
Okay,
Yes.
for the norm, yes, it is.
I suspect it's going to change after.
For sure. And then you have your election. It is so clear. This is the same thing happened in 2008 when Obama, from George Bush, noticed about oil. They're also pushing it up to the upside. And then after the election, actually, it happened already in October, November 2008. That's, you can see it so clearly. That's why same thing is currently happening at this point in time. History will always repeat itself. On the other hand, it won't be as bad as it used to be as well in the past because they have certain regulations that they have to put into place. Sometimes, from what I've heard from the bigger people, from the bigger guys, they will basically push the price so bad in order to create some form of regulation. They will create certain things, some form of chaos in order to put some form of regulation. Right. So now that the regulation has been set into place in 2008 to where we're at today, it will drop, but not as massive as what it used to. Why? Because it's already controlled. And hence, that's why Congress also made a lot of rulings in terms of shorting or like major banks, mortgages, and so forth.
Yeah, you can short like open.
Well, you can still short, but like in terms of especially the banks, the financial industry, there are a lot of regulations now, right? It's not like it used to be where it's so easy.
Okay.
So they cut down into that.
The institution cannot short the market like.
No, institutions can short, but not the retailers, and hence is why they created a lot of ETFs.
Oh, the ETFs
have been created because of what happened in the financial markets in 2008. If in 2008, there's not much ETFs. All of a sudden, they're creating ultra short, triple Qs, all the type of stuff. So for people who would be able to buy the ultra short, but in actual fact, you're just short in the markets, but you're buying something, right? So that's what limits in terms of stock trading. There's a certain limitation. When you have a lot of
understand those key whatever that's
what
you are actually buying.
You're buying what we call an exchange traded fund. So you are just a basket of stocks, basically.
It's basically goes to zero or repeat up and then they combine and then again certain prices. Very toxic thing.
So going back to where we're at, yes, definitely I'm bearish with that. Looking at the daily time frame, like I said, I believe there's some form of manipulation in the markets basically today. There's definitely, it's good for us because you are in a low risk, high probability in terms of trading. And then you will look at the VIX. So VIX becomes easier once again in terms of a monthly. Look at that. The low of this one is 10.9. Yes, it's still a lower low, but also a higher low from this price. Okay, 10.3, 11. Oh, okay, 10.9. So we have a higher low from August. Look at that beautiful long-legged doji right there, upper shadow. This is simply just a gap. So they retested every high point in the past. So they broke out. Now the chances that it can come back to around 20, probably and beyond, is more than likely to happen once again. So they need to retest back to 52. Yes, sir.
So that last candle, that's indecision candle, has a long leg towards upward. What it means? Someone's trying to push it up?
Yeah, someone already tested that price. And that's what's happening, and that's the beauty about the markets. That's on a weekly. I'm sorry, I beg your pardon, monthly. So they retested that, a lot of buying pressures, a lot of demand. They tested it to a certain point, to a certain degree. They made their money, coming back down again, and then they're going to buy it back again in order now to push the price. Because when there's too many supply, they need demand once again, right? When there's no demand, they need to create supply. When there's no supply, they need to create demand. That's law of supply and demand. When you get things too exhausted, no one's buying. So when there's no one buying, they need to make the cheaper price again in order for people to buy. test, retest, test, retest, and then breakout, right? And so when you have that, and you go through on the weekly time frame, look, everything right there is just all translated to. There's a gap right there too. So the odds and probability, like I said, they will continue to go to the upside is more than likely. So I am not bullish with the markets. Okay? The fear has already created basically yesterday. So is it interesting that all of a sudden, where did this news come from about Deutsche Bank? I think people already knew beforehand. So what it was the news yesterday, I think they're thinking of bailing them out or something like that. And that means that they are in trouble. So if they're in trouble, that's like Lehman Brothers. Right? So I believe there's some more into that news, into that story. So just be aware. Fear is, when there's a lot of fear, this is where you can make a lot of money. It's where you get excited. Professional traders, when things are too expensive, this is where we become fearful. We don't get excited. So you have to be wary about it. That's why if you have certain stocks at this point in time, I would reconsider. The French bank offered to bail them out today. Really? So there you go. What if it doesn't want to go? What if it doesn't go through? Right? So there's this type of scenarios that we just don't know the story behind it. Maybe perhaps major people already been leaving the bank. Who knows? But if you have certain trades at this point in time, just
so because of
reconsider.
That, the European market can be down.
I'm sorry?
The Deutsche Bank is in trouble. The German market and the European market can be.
Well, it was down at the very beginning. The futures actually, when the DAX opened, it was 2% down.
Yeah.
And then when they finish at the end of the day, they're 1% up. So, I mean, figure that out. I don't know. So you just have to be, just like, all I'm saying is you have to be careful. You have to be aware about it. Don't get caught, like in terms of all the hype. Stay away from the norm. Okay, you are no longer a retail trader. Okay, so that's based on the VIX. The Dow is basically the same as we already discussed. Based on the monthly time frame, great opportunity. Basically, there's always, yes, 2 uncertain months in a row. And then weekly, on the other hand, beautiful looking lower highs. Part of your lower low, odds and probabilities, like I said, is going to fail. Is more than likely to happen. Even if it goes to the other side, at least you have a low risk, high probability trade. Okay, so, and on the daily time frame, then this is where option traders are getting excited, because when the premium is too low, this is where they actually make a lot of money. They don't go through and when the premium is too high, correct? And there's volatility. Especially when the volatility hits, that's where you make a lot of money.
If you now buy calls 3-4 months out of the money,
you're gonna buy calls, you're gonna buy puts.
Oh, I'm sorry.
Yeah.
I'm sorry.
Yes.
If you buy puts 3-4 months out of.
Oh yeah, for
money,
sure.
For sure.
Exactly.
It's higher chance it's gonna go. Very high chance.
Yes. Yeah, definitely have a high probability right there. Okay, dollar index, same thing in terms of a weekly time frame. And so we go for the monthly first. I have a higher low, and you still have a very bullish one right here. You have a lower high, yes. You have uncertainty. You have that bullish candle. They're holding the price right at this point in time. So the question is, which one's which? This bullish candle compared to this bearish candle, or this bullish candle that is supported by all those bullish candles? Okay. So the odds that this is going to continue to go further for the next 3 months, more than likely to go up rather than to drop. Weekly time frame, you have uncertainty. Yes, you have a higher high. You have a bunch of higher lows. Okay. Beautiful one today, went all the way up there, came back down. So same thing. Have a bunch of higher highs, bunch of higher lows. We just also have a lower high from there. Odds and probability, this will continue, is more than likely to happen. Hence, is why I'm holding my short position with the euro. Worst case scenario, get stopped out, then go to the next one. Okay, so that is the worst case scenario. Oil, beautiful as well. Perfect time for shorting. Okay, let's go to the monthly first. Monthly, you have two bullish candles in the month, one bearish candle, but you also have still a downtrend, lower high. Odds and probability to retest around the $30 mark per barrel is more than likely to happen. Out of crude oil.
There's the OPEC news that they cut down their production.
So if they cut down the production, then what happens? Does that mean that it's oversupply? Then it's oversupply, no demand, and what happens to the price? So weekly, very bullish. Level of supply could be some form of a doji stability, and then it may drop. So these are the things. Just be aware of that.
What do you think it's going to do on the weekly?
Might stabilize itself, and then it may fail. But on the daily time frame, approaching 49, a good price point once again of selling. And a decrease in strength, creating a proper lower high, a proper clear cut of a peak, proper lower high. Next one, either a new, see here, you have a lower low, but either a higher low or a new lower low somewhere sometime in the future. Okay. So that's oil. Let's look at copper. Copper is very bullish based on the monthly time frame. Bunch of higher lows. Back to the level of supply to 29. Could be some form of stability next month. Weekly time frame, on the other hand, you have now a lower high. We have a decrease in strength, so I'm bearish with that. Hence, that's why the Aussie has been really strong. Per our forecast, we were right straight in the money. And I'm looking as well of shorting the Aussie, which makes sense because if the dollar is bearish, then Aussie and copper will also fail a little bit. Then you have opportunity right there shorting Aussie. Okay, so daily time frame, you have a bullish candle, you have a low risk, high probability trade. Okay, and let's go through the TYX bonds. Still very bearish in my own perspective. Right, from what you can see here, you have a bunch of low lows. It may come back to 246 and come back down. So I'm bearish, basically bonds, which makes sense that if the dollar is basically bullish, then this is also going to be bearish. Okay, weekly, if it goes to, like, say, around the 246, like I said, a better opportunity of selling. Okay, so there could be a potential just to the upside, and then bears coming shortly. Then based on the daily, like I said, they need to retest this around that. So a good price point of around selling is around the 246. Okay, so there's good opportunity there too, but definitely longer term is short rather than long. All right, so that's based on the macros. Notice in terms of the connectivity and what's really happening. Okay, so I believe I can't stress more than enough in terms of where the markets are going or heading. That's basically just the probability aspect. Odds and probability, like I said, October will fail is more than likely to happen. So yeah, a lot of opportunities. And let's look at, based on what you guys have done in terms of the exercise, which ones did you find? If you can please type it in your chat box for me, please, then let's have a look. Okay, looking at the monthly with the euro against the US dollar, still have a bunch of clear. There's a lower high right there. No one wants to play the game, and if this is going to be that strong for the past 1, 2, 3, 4 months, technically the price should have not beyond 116.16. A lot of uncertainty. The question is why? Why is there a lot of uncertainty? So there's a lot of news base. October is coming in. So if you're still long, maybe perhaps reconsider either closing some positions, but if you believe that it's still going to go more to the upside, then hang around with it. Based on the methodology, still basing, say, staying to hold, okay? But still a bunch of lower highs. I have a higher low. They can retest automatically all the way back down to here once again. So October, maybe there's a potential reversal or they're bearish. Like I said, if it continues to go to the upside, then so be it. Okay. Based on an M3, hold. Based on an M1, short. No M2s. Weekly time frame. You have a doji. You have uncertainty. Okay, based on that bullish candle, but you have a higher high, higher low. You have also a clear higher low right there. Based on an M3, saying to buy, still hold actually. M1 also saying as long. Daily time frame still basically hold. As of next week, if the price doesn't want to create a new lower low, then I'm also basically out. If it creates a higher low, I will go back in and reverse my position to long. Okay, so for now, because it did create a higher high, a lower low, you can come back around 50%, 12, 62, 1170, 1180 out, and then long. Okay, so those are the conditions. Okay, let's look at the pound. Pound. Okay. Yeah, so I don't know if you guys still hear me. Can you please put in your chat box for me what you found in terms of the M3s, please? All right, looking at the monthly, I have a higher high, I have a higher low, still 3 months in a row stabilizing itself, but that's a good sign that this one created a higher high. So there's an opportunity actually with the pound to go long as well. I was talking about that with one of the members earlier this morning. From an M1 perspective, you have a lowest high probability, which is phenomenal, so which is good. Would have been better if an M2 has been formed back to 130, 145 today, but didn't want to do that. So you have a bunch of higher lows. The low right there is 29.15, 29.16. So perfect higher low. Based on the daily time frame, on the other hand, based on the M2, go through. Did this meet the criteria? Steve, when you calculated, was it did it go just above the moving average or below the moving average? By any chance? If you're still there.
I think it was below the moving average, but it did meet the criteria for an M2.
It met the criteria as an M2. So
Yeah.
the closing price was above.
It was above the trigger point.
Awesome. Okay. So also what RSI is good, you have divergence. Your standard deviation actually was pointing to the upside and price was dropping. Okay, or S, actually, or D. visual standard deviation. So you have another opportunity to go long right at this point in time. And then maybe Sunday, if it continues to go to the upside right here, then you have another M2 methodology, 2 in a row. Okay, so that's a good one. I give the pound dollar a 5, actually 3 out of 3
Okay,
stars.
Ray, I was mistaken. We missed the criteria on hitting the trigger point by I think about 2 pips. So I was thinking of the pound Swiss franc.
Yes, gotcha. All right, so then an M2 will form shortly by Sunday. Approximately, if it goes above 129.96, that's about 20 pip to the upside. And then by, this is Sunday, Monday, approximately Monday, you might have an M3 methodology to go along. So this is basically the trade of the week for me. Okay, so I've been monitoring that, the pound against the US dollar. Okay, let's look at the dollar yen. Dollar yen was also a good one. Okay, so here you have a higher low. So pretty neat. Then this has also an opportunity to head back up approximately around 700 pips to the upside. So if the dollar will be a little bit more stronger for the month of October, then that will translate as more of a potential one.
So far, we don't have a confirmation for M3.
For M3s, no, but definitely for a different methodology, yes. So here, created the now proper low, 110. 108, oh, okay, perhaps 100.1008. Okay, so I have a lower low here, so nothing. Okay, so, but still within the demand level, there's a potential right there as well coming back up. This one, let's look into that. 10154. Missed it by less than 2 pips. So by Sunday, you have an entry to go long, okay, with the dollar yen. No M2s, no M1s. Okay, so there's an M3. I will go through, I know while I have it here, the pound Swiss. Pound Swiss stuck to the game plan. Okay, if you stuck to the game plan, then awesome. All day, every day. Okay.
Came too long.
Yes. So he didn't take the stop. I believe this has opportunity to go to our major target points shortly. You will want to scale it even actually better. There's opportunity to scale this as well to add more. You can add more to your positions. And so there's opportunity to add more positions either today, put some, and then Sunday you can put some more as well. So then by either Monday or Tuesday, then you can add more once again to go through an M3 methodology. Okay, so I'm holding and just waiting and putting some more pretty shortly too. So I have no M2s and M3s. I'll go through Aussie against the US dollar. Aussie is very powerful, very strong at this point in time. It's still in the criteria of the methodology. So it's still basically a hold, no change at all in the monthly time frame. Weekly time frame. Okay, so it shows a different story. You have now a position to go long M3 right there. So Aussie, there's a daily, and you guys should have a weekly through there too. Daily time frame. Well, came back down, came back up. So lower low, either well, you also have a lower high right there. And they come back down, come go back up and come back down. Okay, just hold nothing on a daily. Go through the pound. Let's go through the Kiwi. Kiwi, a lot of dojis, but a lot of higher highs. This may form some form of a correction for the month. Again, weekly, first time now creating a higher low, lower high, higher high. And for advanced, there's definitely one right there in terms of your reverse Hail Mary technique. I think probably this will fail based on M1 methodology is more than likely to happen. Daily time frame. So if the price can come back around 73.50, somewhere there, then definitely that's a good sell position. At this point in time, it is still within the criteria of selling, so no change at all. Okay. One more. Let's go through the dollar against the CAD. Dollar against the CAD, it is still in the criteria of selling too. So odds and probability it may fail, more than likely to happen. So I got a mixed messages right there. Weekly, saying to go long, buy, higher low. Okay. Higher low based on M1, no M3s. M3s is still basically a hold position. Daily time frame. Oh, okay. Daily time frame. Depending on what it will do, if it creates a lower high, then back to currently in a sell. I mean, still within a sell position at this one. Short. Let's go to Euro Yen. Euro Yen, beautiful. That's a buy. Easy. Well done, Bala. Weekly saying still basically short, but you have a higher low based on M1. Notice how the low of this week just touched the trend line. Okay, so powerful stuff. Still pretty much higher low than either new higher high somewhere sometime. At the same time, you have a sell position right there, so it could easily come back down before it can come back up. But the daily time frame is saying to go long. Okay, so you have only now within this distance. This one's finished. $38 and 50%, mainly 11, 114, 22, 114, 70 add something. So approximately first high probability, 20 odd something pips, all the way to around 70 pips. Easy.
Hey Ray, would you advise to let it retract to the moving averages first?
Yes, definitely. Can come back down to one better price around 113.20 because of the lower high too. So yeah. Now if you just want to get in and leave and forget, then you can buy it now and you can just leave it right there. But you have a better price. If you want to test, add more to the positions, then you get at least getting a 60 at something 70 discount to make 100 something pips. So yes, definitely, you have that option. Right, one more. I'll go through the the pound Japanese yen. Monthly is still pretty weak, okay, but at least, like I said, it's similar to the pound dollar. Create a new higher high, higher low. So at this point in time, there's still a potential to correct itself. If you have a confirmation from on the weekly time frame next week, bam, beautiful. Then odds are probably you go 137, at least to make 600 pips to the upside is more than likely to happen. Hence, on the daily time frame, you have a higher low, but if I see another higher low right here, at least this high broke already that high. 1, 2, 3. I need number 4. So right now, as per Monday or Sunday, there could be a M3 to go long right there. So the pound is a good trade. Pound yen, pound US dollar. Those are my high probability trades.
Question.
Yes.
So when if we're forecasting that the dollar index is going to go high because of the market, so it means dollar is going high. So how that correlates to the yen and pound pair, the dollar index?
Well, yen is also a neutral currency, so it doesn't really play that much with the dollar yen. They're neutral based, so it's only major like in terms of how much powerful it is. So, but if you compare it with the pound yen, if the yen will be weak, then if the pound will be strong, then it will just go regardless. Okay. So, longer term, yes, the dollar is powerful, too strong. Shorter term, medium term, it has to come back and retrace before it can go up, right? So that's why everything that we're dealing here on the daily time frame, we only have a small window. So the question is up to where? Corrections. Okay. All right. So that's basically it for today. Do you guys have any questions unless you have found anything else? So for people who did the exercise, was only Brandon, Andres, and Bala. How about the rest of the crew? What did you guys find?
Wait, I can't listen and write it.
Okay, got it.
And I haven't looked at what they have, but I did do the exercise.
Perfect. What did you get, Bronny?
For the monthly, I got the Euro USD long rate entry.
Okay.
Same for the Aussie.
Yep.
Japanese yen short re-entry.
Okay.
Kiwi long re-entry. I got that we need to wait on the Swissy.
Okay.
And the pound USD short re-entry.
All right. Perfect. Very good. Thank you. Okay. Any questions then for me before we can wrap it up?
Just to confirm, right, for next week, we are bullish with the dollar, right?
Well, with the dollar index itself, there could be potential correction. But nevertheless, yes, I am still bullish with the dollar.
Yeah, that's
So
what I
I'm
thought.
hoping my euro dollar position to fail if, like I said, because of the long shadow to the downside.
Okay.
Sorry, Sam. Would you... So because of this lower shadow right here, you have the potential to price to drop. If it drops and goes below, it doesn't want to go below that low around here, then you have a higher low, then I'm going to change my short position to long. But based on the method 3 methodology, if you guys entered an M3, then definitely still a hold, no matter what. For our methodology, is still basically a short.
Okay.
Okay.
Thanks.
Awesome. All right. Any other questions? Albert, Ian, Jared, Brandon?
All good, thanks.
Perfect. Well, you guys enjoy your weekend. I will see you guys. Steve, do you have any questions? I will see you guys on Monday.
I'm good, Ray. Enjoy the weekend.
Likewise.
Thank you.
Thank you.
Thanks, everybody. See you.
Thanks, Ray.
Bye.